Today is Thursday, June 30th, JPM roll day, Russell 2K reindex day. It's going to be an interesting day. Let's get started. Please pause your player, read this. It's important to you, it's important to us. If you accept, go ahead and hit play and continue. The market model via our cumulative tick is still longer term trend remains down. You can see that here. We're in a very short-term trend down mode, but we did see some stabilization into the afternoon session yesterday, something to pay attention to. Institutionally, we saw some risk off in the morning, then more or less flat in the afternoon. The breadth here is still quite poor. You can see it's actually been getting worse day over day, which is not a good thing for the bulls. So overall, not a very bullish set of indications here, and we're still playing the downside of any rally. When we take a look at the index condition, we're seeing negative gamma being added across the board. The Qs are the exception. We did see negative gamma come out and some positive gamma go in. That's short-term puts being removed and short-term calls being added. Something to pay attention to, certainly. Bucking the trend, could be taking advantage of some seasonality there. Hard to say. IWM here, you can see no demand for calls to the upside for small caps. And you can see that we've had a slight increase in the net negative gamma. So overall, when we take a look at the SPX, the SPY, and IWM, still quite bearish. Qs are bucking the trend. Volatility, really just seeing some calls being added. The next expiry is shown here. You can see where we are with this dot. We're slightly above the transition. You can see we have quite a bit coming out. This is next week. These won't expire until Wednesday morning, but Tuesday's the last trading day. So just be aware of that. Are seeing that we are below some of these calls here. So not that we believe gamma and the VIX are directly tied, but we do like using the same tools to see how they stack up against some of the other things that we're looking at. You can see volatility as a history here with respect to the different gamma levels. Very, very solid, not moving, still within that very tight range, and so play that accordingly. Near-term expiries, today's Thursday, it's the end of the month. We've got the SPX expiring today. We've got some key things that are going on with the JPM roll that's occurring today. The SPY, the Qs, and IWM expire tomorrow. You can see I highlighted where we are with relation to the zeros. 380 is clearly a line in the sand. This 170 level is clearly a line in the sand for the IWM. And down here, 280 is where I would be looking at for the Qs. We're well above that. So we're very, very close to not having any pressure on the Qs from an expiry point of view. We could go either way. And remember, this changes the moneyness on the SPY. If we're below 380, we could have some issues. So that could set up a rally attempt to push north, and we want to watch that. Same thing here, 3,800. If we're below that, we could see a rally attempt to go north. We take a look at the index OI changes. Basically 2 days ago to yesterday, you can see that we are seeing, make sure you check the magnitude here, we are seeing some puts being added on this SPX complex relative to the calls. Over here on the SPY, we're actually seeing calls being added relative to the puts. Again, check the magnitude so you can see what's going on here. The distribution of the calls and the puts are shown, calls on the left, puts on the right, and you can see where things are being added. Taking a look at the Qs, 60K being added here on the call side, smaller on the put side. This is why we're seeing some of those puts being closed and calls being opened. You can see the distribution, though, builds as we go out in time. So short-term rally in the Qs, potential anticipation of a downside as we go out in time in the Qs. So that's the one-day view from this. And then IWM, you can see we're getting quite a bit of dominance to the downside for IWM pushing out in time, so just pay attention to that too. The SPX structure for today adjusted the different levels that you can see here. We're again below a lot of the key zeros. We need to push higher. It's going to be very, very hard to push higher than 4,000 for a number of reasons. We've got the zeros here, but I will note they are all starting to move up. So we've been coming down many for 2 weeks plus. Looks like we've stabilized a little bit and now may start pushing upward. This is short-term bullish. When we see the A's also, this is the AM settled monthlies. When we see them starting to push up too, we can see that perhaps the institutions are starting to look out and I don't want to say call a floor, that would be ridiculous, but at least anticipate the potential of moving up. So you can see where we are within this structure. Got some overhead. If we move back up into this area, it's going to be very low pressure. It's going to be hard to get up here and stay up there, and it's going to be certainly even more difficult to push higher than 4,000. Taking a look at the 0 DTE, JPM expires today. We've got a short call at 46.95, which is virtually worthless. We've got the 42.85s, which is deep in the money. It's going to limit out at -1. And we've got these 36.20s, which are short, and those will expire worthless. We do expect some behavior around the 42.85s. I wrote extensively about it in the Discord. I've got some charts in the Discord. I would urge everyone to come in and take a look at that. We do have a couple different scenarios. Pause your player, read these, it's important. The key takeaways here is that we're just below this expiry transition. We're not going to see a lot of pressure in there, I don't think. We do have a significant amount of magnitude here. But I note, relative to what we have on the downside, we don't have a lot of draw to the upside. So from the expiry perspective, I'm not expecting a lot here today. So just be aware of that. The combo. Got a lot going on in the combo. We've had positive GEX move up to 4,600 from 4,300. There's a number of reasons for that. Make sure you understand why that is. If not, come into the Discord and ask. We're in this really poor region. You'll see that also on the next chart, where it's just going to be really hard to advance. We've got a lot of negative deltas here of significant magnitude at some key levels. We've got COI and POI, which simply are not budging here. The delta adjustment to get over 4,000 is just almost insurmountable at this level. 73 billion to get across that chasm, and to go from where we are right here up through all of these adjustments is not a one-day change. I just can't see it happening. To the downside, structure's really poor on the delta side. Gamma levels are all negative once we get below, say, 38.30, so we're not in a great zone. There's not a lot of push to go north, and this structure looks really, really poor. Just kind of build on that. Here's the structure transition. When you see this back and forth like this is effectively we've got a war going on, and so the price can hide within any of these transitions. That's where gamma collapses to zero, and there's not a lot of pressure intraday. So we're right here, we're below this, we're still in a very negative zone. We've got these build outs, which are fairly significant at these key levels. We've got this wide dispersion of call GEX that's up here. Positive gamma, and it's a very ugly structure to move up rapidly. So we may try to push here, but the structure needs to change for us to sustain any forward move. So what's the summary for today? You know, the grill in the room is the JPM hedge roll. Of course, we've got the Russell 2000. That's also happening today, the rebalance. That will also add volume and fuel to the fire. But with prior history as our guide, the JPM folks don't necessarily handle this delta gamma imbalance either into the close. They're doing a better job into the close. They don't always get it right. And we'll see that in volatility at the end of the day. But they also will leave the market exposed overnight and into tomorrow. Now, tomorrow is a illiquid day. Typically, it's the fourth day of a 3-day weekend, and JPM or July 4th weekend. So tomorrow's going to be really, really interesting to see what happens. We've got inflows from the Russell 2K imbalance. We've got the end of quarter mutual fund inflows from everyone's 401s. It's going to be a real interesting day. We'll have to see how things look. The Qs, they look bullish. Everything else shows puts are being added. Remember, a heavily protected downside does not collapse, so we could push south, but I don't think we get too far south. before we rally. Structure does not support any major rally upward. Just be aware of that. The rest of this I've already covered. 3,800 is the line in the sand. Below this, 37 is wide open. You can see that here, 37 here. So if we lose 38, you can see there's not a lot of stopping points. Here's a 37.50 at the quarter levels perhaps, but in general, 3,700 becomes the target. And as I said, I don't think we can get above 4,000 anytime in the near future. So that's it for today. Hope you enjoyed this. If you did, come join us at GammaEdge.us. That'll take you to a sign-up page, get you into the Discord, 14-day free trial, all the tools turned on. Great group of traders. Everybody has a different style, and learning how to apply this stuff to your trading style is really our focus. Follow us on Twitter at GammaEdges with an S, and here on YouTube, if you like today's content, please smash that like button. Smash it hard. And follow us, of course, so that next time we post something, you get notified. With that, it's going to be an interesting day. Hope everyone's paying attention, and we'll see you tomorrow.